it's important for me to use our remaining time to speak about one specific decision in front of Congress that will have significant implications for your businesses and for the broader domestic and global economy, and that's the debt limit. Yesterday, I told Congress we still estimate the Treasury will likely no longer be able to satisfy all of the government's obligations if Congress has not acted to address the debt limit by early June, and potentially as early as June 1. It's impossible to predict with certainty the exact date when Treasury will be unable to pay all the government's bills. And I will provide an additional update to Congress next week as more information becomes available. Nonetheless, our current best estimate underscores the urgency of this moment. It is essential that Congress act as soon as possible. In my assessment, and that of economists across the board, a U.S. default would generate an economic and financial catastrophe. Over the past few years, American families and businesses, including many of yours, have worked hard to mount an historic economic recovery. And a default would reverse all of the hard-earned progress that we have made, and it would set us back even further. Our economy would suddenly find itself in an unprecedented economic and financial storm. Millions of American families that rely on payments from the federal government would likely go unpaid, and that ranges from 66 million Social Security beneficiaries to millions of veterans and military families who have served our country honorably. The default could cause widespread suffering as Americans lose the income they need to get by. And the resulting income shock could lead to a recession that destroys many American jobs and businesses. The economic crisis would be exacerbated by possible disruptions to the federal government's operations. Essential services that enable global commerce rely on the work of federal employees and contractors, and that includes air traffic control and law enforcement, border security and national defense, and food safety in our telecommunications systems. But federal agencies would be unable to pay all of their bills. It's unclear if and how critical government services would continue to function. And of course, the financial crisis that accompanies a default on our debt could multiply the severity of the downturn. The U.S. Treasury market serves as the very bedrock of the global financial system, and there's a reason for that. The world has never doubted that America will pay the principal and interest on its bonds in full and on time. That's a fundamental principle of modern finance. A default would crack open the foundations upon which our financial system is built. And it's very conceivable that we'd see a number of financial markets break, with worldwide panic triggering margin calls, runs, and fire sales. What could all this add up to? The White House Council of Economic Advisors has simulated the impact of a protracted default. It finds that it could lead to a downturn as severe as the Great Recession. In its simulation, over 8 million Americans lose their jobs. Business and consumer confidence take a substantial hit. And the value of the stock market is slashed by about 45%, wiping out years of retirement and other household savings. Moody's Analytics used a different model to project the effects of the default, but it reached a similar conclusion in its study. More than 7 million Americans lose their jobs, and the unemployment rate surges to over 8%, and $10 trillion in household wealth is wiped out. Now, if that sounds catastrophic, that's because it is. Now, this crisis is entirely preventable. The solution is simple. Since 1960, Congress has raised or suspended the debt limit about 80 times under both Republican and Democratic administrations, and Congress should simply do so again. Raising or suspending the debt limit does not authorize new federal spending. It simply allows the government to make good on its existing commitments. So let me be clear, if Congress does not address the debt limit, there are no good options the Treasury or the government can use to save us from catastrophe. Look, and we're a country that keeps its word. Generations of Americans have protected the full faith and credit of the United States. That's been a bedrock of our global economic leadership. And there's no good reason to squander that reputation now and to trigger a manufactured crisis of our own creation. Time is running out. Every single day that Congress does not act, we are experiencing increased economic costs that could slow down the economy. In 2011, we resolved the debt ceiling crisis right before the government had to stop making payments. But that 11th hour brinksmanship led to the first ever downgrade of our credit rating in history. Consumer confidence fell by over 20%. The S&P 500 plummeted by about 17%. Spreads for mortgages and auto loans widened, which generally makes it harder for households to afford houses and cars. And we're already seeing the impacts of brinksmanship. Investors have become more reluctant to hold government debt that matures in early June. And the impasse has already increased the debt burden to American taxpayers, as the leader of the Treasury Borrowing Advisory Committee said last week. Too many businesses, including yours, are having to spend your time planning around the potential risk of a U.S. default instead of thinking about longer-term investments that will grow your enterprises and boost the economy. And too many households are having to worry about how they will get by without the payments that the government is promising and that these American families have earned. The U.S. economy hangs in the balance. The livelihoods of millions of Americans do too. So there's no time to waste. Congress should address the debt limit as soon as possible.